Welcome to Blockchain Recorded, the podcast for the tech curious, where we talk about anything and everything related to the exponentially evolving crypto, blockchain, and Web 3.0 space. Our mission is simple: to share knowledge, facilitate discourse, and help evolve education in blockchain fundamentals, decentralization solutions, and relevant use cases for today's digital economy. We at Blockchain Recorded are not registered investment advisors and do not deal with financial or trading token elements, nor offer any licensed financial services. The content of this podcast is for informational and educational purposes only, while the opinions of all parties involved are their own. I'm your host, Nina Tserar, and now let's talk blockchain. Before I introduce our guest today, I'd like to remind our listeners to follow us on Twitter, where we pre-stream each episode on Twitter Spaces the day before publishing on all major podcast platforms. For the platform list, visit our website, blockchainrecorded.com. And today we have with us Adam Reeds. Adam is the co-founder and CEO of Ledn, I hope I'm pronouncing that correctly, a global company regulated in the Cayman Islands that focuses on building financial products to help people save in Bitcoin and digital assets. Prior to co-founding Ledn, Adam spent 10 years at Dream Asset Management, where he developed, built, and financed a $1.5 billion portfolio of renewable power projects. Adam, welcome to Blockchain Recorded.
Thanks so much, Nina. Great to be here.
It's really great to have you here, as today we're taking a little twist in the topic and talking about lending and crypto lending and maybe demystifying some of the reservation that people have given everything that's been going on in the crypto space over the last couple of years. Let's just go straight through your background. I'm actually pretty intrigued. I saw, if I'm not mistaken, that you started out in banking as myself, and you have a banking analyst background, went through renewable energy infrastructure, tech, real estate. I see this little combination going on. What brought you to crypto, or well, actually Web3?
Yeah, of course. Happy to get into that. So I actually went to school for mechanical engineering, and then I liked the social aspect of business. So I got into, and I was fortunate that I had family members that were both engineers and in different business that I could kind of foresee what the different careers would be like. So I studied mechanical engineering in Canada, and then also completed a business school in Canada. And then I wanted to find something that complemented both. And so I found a early stage startup that was developing renewable power projects in Canada, actually taking a European model and dealing with the digestion of different types of organic materials to convert it into power. And so that was an interesting startup to work for a couple of years. And then after that, I went into the other side where I was directly investing in the type of projects that that company would have been developing. And what was neat about the experience in power is that I used to joke that I was kind of in the business of converting kilowatt hours into dollars. And what I mean by that is kind of bridging conversations. And so what you typically have is you have people that are super technical, and then you have people that are really good at finance, but sometimes kind of bridging that communication gap is challenging. And so really how I got into Bitcoin was realizing there was somewhat one and the same in that anything that's really misunderstood or new, there's often opportunity there because those that can spend the time to understand it and think through what the opportunity is, it's exactly that. It's an opportunity for them. So I was fortunate to go to school with a friend of mine that is now my co-founder in the business. And he grew up in Venezuela and I grew up in Canada. And really what was interesting about that was there couldn't be any farther differences in how we looked at government and how we looked at money. And really what got me into Bitcoin was him, and realizing that money is not the same for everybody. And that I was fortunate to grow up in a place that had very strong rule of law, very strong property rights, which is, I think, those in the space commonly believe that that's really the fundamental building block for building an economy. And that it was pretty interesting to think about how to do more with Bitcoin. And so how my power experience kind of bridged that was twofold. So in the power industry, everything's very local. So if you want to finance a power project in Canada, US, or different parts of Europe, it's fairly straightforward. Again, very strong rule of law, contract law is everything, because you're getting asked to invest a lot of capital up front, and then on the premise that you'll get a long stream of cash flows. And obviously that's harder to get your head around if you don't believe in the government or rule of law in different places in other economies. What was interesting about Bitcoin is it's the same everywhere. And so a Venezuelan Bitcoin was exactly the same as a Canadian Bitcoin. And therefore, it was more interesting to look at as a financial asset, because it got rid of all the complexities that typically exist with financing an asset. So it was really, commonly understood that the first truly non-jurisdictional asset, in that it's equal to everybody and the same everywhere. So that made financing it pretty cool. And then the second part of it was, at the time, energy storage was a really big deal for what I was doing in renewable energy. The idea that, it was great that the wind blew sometimes and the sun shines, most of the time, but it wasn't always when you needed power.
Right.
And so the idea that you could store electrons was a big deal. And there was an interesting relationship between Bitcoin mining, in that you could also take some electricity and effectively store it for later, because you're converting it to dollars in Bitcoin or Bitcoin, and then you can convert that back to dollars when you need it. So it was those kind of revelations that really was the kind of start of Ledn and what we were working to build out. So long answer, but hopefully that gives you some context as to what got us excited about it.
No, totally. I actually find it fascinating that yourself being from Canada, so sort of the saving/investment portfolio environment, fairly safe in terms of financial stability, versus Venezuela, where there's, chaos going on and people are struggling with dealing with double-digit inflation, which is not just like a one-time occurrence. It's just sort of never-ending. I'm fascinated by that story. And if I'm not mistaken, because I actually did take a listen to a few of your podcasts, and where your colleague Mauricio was speaking, were you also involved in the mining as well? Or wasn't sure if I...
That's right. Yes. Yeah. So we first got into mining prior to creating the financial services business, and mining obviously was the closest thing to what I was doing in the energy sector, in that, Bitcoin mining projects have high upfront cost, and then again, a stream of cash flows. So we thought it was an interesting place to start. I as well wanted to force myself to learn. So I thought, the best way was to put my money where my mouth was, and, invest in some mining equipment and really understand and break it down of how to do it. And then the financing piece was the tertiary piece that pushed that together. So as we got into building out a Bitcoin mine, we realized that the opportunity to finance it was far and few between, in that in Canada, it was difficult to get banking. The banks, even still today, are very reserved when it comes to dealing with the asset class, and let alone, get a loan. That was just an insane thought. So really it was, okay, if we're experiencing this problem, then other people likely are too. And so we put together all the different knowledge. Really, I was kind of wearing the hat of what would someone need to get comfortable lending, and Mauricio was wearing the hat of what would someone need to get comfortable with borrowing, because that's the interesting thing about a loan product, is it really does have two customers. You have to keep it, both sides of the capital balanced. And we developed Canada's first Bitcoin-backed loan in 2018, and so that was pretty exciting. And then worked through some different aspects of where else it would be valuable.
You mentioned that Canada is not so keen on the sort of, if I understood correctly, the Bitcoin as an asset class in general. How did you navigate through that during that time, or actually, and now? I mean, I know now in terms of the background you're located, or actually you're set in the Cayman Islands, but how did you navigate it at that time?
Yeah, so the banking sector is obviously, like in most other countries, highly regulated. But in Canada, I think it comes with a lot of pride that Canada didn't have the 2008 blow-ups that the U.S. did. And the banking sector is very, very different than, again, apologies for always using Canada-U.S. analogies, but that's obviously
no, it's fine.
Where I grew up. And
it is what it is.
That's, obviously the markets that I understand well.
Right.
But, in the U.S. where you have, thousands of different regional banks and you can essentially, start, not overnight, but, there's a bit more entrepreneurship and different ways to get started. Canada has, big five banks, and it's essentially an oligopoly across the country, and everybody sets the rates the same. And the common joke is you choose your bank based on your favorite color because they're all the same. And, they kind of move all the same. When one moves slightly ahead, the others kind of rush to cover up. But the benefit of that is it's stable and it's secure. The downside of that is innovation and also an impetus for change because the banks are quite profitable. There's a very good business, where you're taking in deposits, charging banking fees for operating standard accounts, and then running different types of financings on traditional assets. So obviously real estate being the major one in Canada, given the demand for immigration and new housing here. So I think just when it comes to new stuff, I think it really comes down to incentives is, why change? And then at the individual level, there's career risk. So I think that's how I've come to terms with it after being, frustrated for 5 years of trying to, get banking. And so that's, the kind of aspect of it. The other thing is Canada had a blow up early on in the digital asset space with an exchange called Quadriga CX.
Right.
So there was, a bit of an embarrassment that the Canadians lost about 400 million there. I think there was some recoveries afterwards, but at least that was the headline number back, in 2018. So that really caused an impetus for the different regulators to jump on it. So where it's at today is the Canadian regulators have done a good job of regulating pure play exchanges. So, if you just want to buy and sell Bitcoin and you are offering what is a custodial platform. So to break it down, if you offer Bitcoin or other digital assets and you broker them, you need to be registered with FINTRAC, which is the anti-money laundering regulation, but you don't need to be a securities regulator. You don't need to be regulated under the securities framework. But if you offer more like traditional exchanges work where, if you're a Kraken or Coinbase and you want to, have clients keep their assets on the exchange, then because there's the concern that you are entrusting your assets at a later date and expect to be able to return them, then you have to go through a whole bunch of additional hoops to be able to do that. So that's now, I think, again, they did a good job of coming up with a framework for that. But what they haven't done yet is they haven't come up with a framework for different types of digital asset businesses and lending being the one that obviously Ledn is focused on. So we're in good dialogue with the Canadian regulators, but it was clear that things weren't that there wasn't a framework for us to fit in today in Canada. So we had to move. We had to look at other jurisdictions that had existing frameworks that allowed us to operate and offer the products that we do.
I see. Hence the move to Cayman Islands.
Yeah, exactly.
Let's set the stage for lending in general and what it means, just the industry. If you could maybe quickly explain, how do traditional versus crypto loans work in terms of, let's just start with that. That would be good.
Yeah. So most crypto lending is what the TradFi industry would refer to as asset-based lending. And so there is starting to be some early use cases of credit-based lending where you're doing, looking at the borrower's ability to repay based on other types of cash flows. But the type of lending that Ledn is doing is looking at whether you have an asset that we can collateralize it against. That's the product that we offer at the retail and high net worth individual side. So again, in traditional sense, you have kind of all different types of lending. So you would have asset-based lending. I'd say the one that we're most akin to would be how the banks finance equities. So if you want to purchase Meta, or what used to be called Facebook stock, and you want to buy more of it, the banks will offer you different types of financing in your brokerage account. So that would be kind of at least the similar market structure with how Bitcoin-backed lending works today. I'd say that the difference and slight tweak is our loans are intended for a bit longer term use, and therefore we set different loan to values for that. That would be one thing. I think the things that are the same is, at least for centralized lenders like Ledn, we still have to follow anti-money laundering regulations. So just like in the banking model, you have to know your client, you have to collect all that different types of information.
Right.
But I think the benefit and difference of what we're doing is speed. So if you think about how long it takes a bank to even approve a mortgage, you're looking at likely a minimum a month, I think. I mean, that's been my experience. And that's, again, because there's all these nuances of trying to understand the asset that it can be a little bit unique and different versus, again, in digital assets, because the asset is uniform and the same, and because you have it through just physical delivery of the asset, the speed is significantly improved. Like we can approve loans. Our standard delivery is 1 business day, but we've done things in an hour after somebody has applied, and we have all the information. So that's what makes it really exciting, I think, that aspect of it. The other, I think, aspect is fairness that I really like, in that, again, you're providing the same rates to different clients globally because the asset's the same. So that's an interesting aspect of it as well.
You actually just answered one of my questions, which was in terms of drawbacks that traditional bank lending does, right? So speed is one of them. Is there anything else that you see as like a main drawback of traditional bank lending versus what you guys are doing now?
Yeah, I would say the amount of administration and paperwork involved. Obviously, I think when you have been doing something for 100 years, naturally it gets a bit clunky.
Right.
And we have the benefit of starting from scratch and really figuring out how to keep only what we need and eliminate what we don't. And so we've been really able to streamline the loan approval process. So it literally takes 2 minutes to apply for a Bitcoin-backed loan on Ledn. And, that's been something that I think has been refreshing as well.
I sort of want to get into I can't help but ask you how you guys managed to survive last year's domino effect fiasco with everything that was going on, and even before with Terra Luna. So, with the BlockFi, Celsius, FTX fiasco in terms of the lending platforms. How did you guys survive that? What did you do differently than other crypto lending platforms? Yeah,
I'll first maybe just quickly frame up the different types of products and then the different types of customers or clients, so that's understood. So so we have really the Ledn has 2 types of products. So we have our Bitcoin-backed loan, where we offer 2 types of loan products, and a few others. But on the lending side, we have our Bitcoin-backed loan, where we're lending dollars, and that's 2-to-1 secured by Bitcoin. So if you want to borrow $1,000 USD, you're going to deposit $2,000 worth of Bitcoin, and then there's ample margin there to protect from ups and down swings. And to the extent the Bitcoin price goes lower, we ask clients to top up. And in the event that the loan is not repaid, there's ample collateral to manage that. On the other side, we have products where clients can earn yield on stable coins or on Bitcoin today. We're going to be adding a select amount of other assets shortly, but that's the assets that we support today. And on the dollar side, that's pretty straightforward again. So most of the stable coins or USD is actually used to fund our own retail and high net worth loan book today. On the Bitcoin side, we have to figure out a way to offer yield on Bitcoin. And so the way you offer yield on Bitcoin Bitcoin is there is a market symmetry where different types of trading firms and market makers want to borrow Bitcoin to do exactly that, market make. So this is, in a very, very plain vanilla example, Bitcoin's trading at a different price on Kraken than it is on Coinbase. So they're using the asset to sell on one, buy on the other, and effectively, as the phrase is, make that market and close that price gap. And so to facilitate this, they can trade with their own inventory, but obviously their trading becomes a lot more profitable if they do the same thing with a higher volume of assets. So in that type of activity, you can't collateralize the loan other than looking at, of course, so you have to look at the credit of the institutional market maker, because if you're collateralizing it, they're not actually getting any leverage on what they're doing, and so they're not increasing any profitability. So there's not really an opportunity for them to borrow that asset. And so it's really, really important to look at the credit analysis of that type of borrower and understand the type of trading they're doing, making sure they're not doing any types of major directional trading or other things like that. So that's an aspect that we've had to look at and really understand well. So if I can break it down now, kind of looking at what happened in the other lending space. So if I take a company like Celsius, Celsius supported an enormous amount of assets. I believe at one point I counted 50 different types of crypto assets that they were supporting, and they were offering yield on all of them. So when you offer yield on them, you obviously have to figure out a way to pay that yield. And so there's what asset that you're supporting, and then there's what type of investment you're putting in, and then the third is for what type of tenure. And so if you're offering to pay yield on an asset that doesn't have a strong market demand for, then you have to figure out a way to obviously get another asset that does. And first off, the reason that there would be the incentive to do this is in 2021, there was incredible froth for assets under management or assets on platform, meaning that if a crypto lending company could show that they had 15 billion of assets on their platform, there was essentially a 3-to-1 multiple, meaning that if they had 15 billion of assets, they were worth 5 billion. Then if they're worth 5 billion, obviously everybody is happier with these crazy valuations because the team is happier, their options are going up, the founders are of course happier because they may be even selling part of their equity to new investors, and everybody's happy in an up only market when things are going wild. So that's, I guess, framing the incentive of why they would want to pay yield on all these different types of assets to bring them in. But again, bringing it back to the challenge of it is that if you're bringing in assets on your platform that aren't profitable, then you create problems and you add complexity to what's going on in the underlying operations. And so what was happening was these companies were doing exactly that, and then they were at times then putting in directional risk. So if there's no market demand for, let's say, a top 10 altcoin, but I can offer to pay a yield on it and get it in, then I've satisfied one, but I haven't satisfied obviously how I'm going to pay that yield. So what they would do is they would post that asset in perhaps a different type of decentralized protocol. Then they would borrow another asset, likely a stable coin, that they could lend out. And then they're partially solving the problem, but they're adding in a different risk. So now they've solved the yield piece, but now they've added in directional risk. Right. Because again, in an up-only market, if everything's increasing, it's okay. But if the market starts to come down, then they have to pull those stable coins back, repay the loan, so they can pull back the asset that is their clients and return it in an effective manner. So the straw that broke the camel's back was, of course, Terra Luna. And when Terra Luna happened, that caused a big compression in all the decentralized protocol tokens. And then therefore it put pressure on this exact system. And I mentioned the secondary piece was tenure. So if I put up, let's say Link coin, I'm just using that as an example only. There's no... Sure. Yeah. So, and then I borrowed stables against it and lent that out. And then I had those stables locked up. Now, my loan value, my LTV is going up, but I can't pull that asset back. So that piece in itself, adds a whole bunch of challenges to do that, and ended up causing some, liquidations and different aspects of it. The other type is just taking different types of client assets and putting them in illiquid strategies. So that was done. But to answer your original question, why did this not happen to Ledn? So Ledn did a few things correct, which was really important from a risk management perspective. One, on the asset side, we didn't mismatch assets. So if we were offering to pay a yield on Bitcoin, we only ever earned that yield in Bitcoin. So we didn't swap it, like I just explained. The secondary one was we didn't lock up assets. So if we are offering open term deposits and you want to be able to withdraw, you better be sure that you can withdraw that asset tomorrow and it's not locked up in some type of tenured contract. And then the third is we didn't lend more than we could afford to lose, in that we thought that if anything that you're doing, there's kind of a classic saying is at times you don't know what you don't know. And if you don't know what you don't know when all else fails, you better be certain that if something happens, that you have a kind of a full-on breaker that protects all of that. And so what we did was we had a lending constraint that we didn't lend more than our net equity to any one particular borrower. And that's what protected us from the final straw that broke the camel's back, which was FTX and Alameda. So when that company went down, our group of companies went down, we did experience a lending loss, but we were able to protect client assets because we were able to buy back those assets with our own equity and protect that from happening.
What about lending to lenders? Wasn't one of the problems that, the companies that went down, obviously they were scratching each other's backs, but what's your protocol in this? Do you also, in terms of, because this is another one of my questions, sort of, I guess, what's your mantra in terms of lending out? Do you lend out to lenders? Is that what sort of, protected you as well?
So today we do not. So historically we did have a relationship with Genesis, and that was in place really when we were a early stage company, and we were looking to offer yield on stable coins at first, and then Bitcoin later. And what we wanted to do was always make sure we understood what was happening with the assets. And so I would say there's not a hard and fast rule on that, but you better be sure you understand how they're utilizing the assets and what's in that. And so when we closed our seed round in the beginning of 2021, we had a mantra to make sure that we de-risked that relationship. One from just an economic and piece of it. So we wanted to make sure we had more control over our own economics in the business. And two was de-risking from a just overall risk management standpoint on that relationship as well. So when it came to the time where Genesis did have issues, we actually didn't have any substantial assets with Genesis. So we had fully diversified away from that relationship. And so today we don't have any loans out to lenders. And I'd say I don't think it's an area that we will, because it's kind of like what we're doing. And so we'd effectively be paying margin twice and giving economics away. But I think, if and when it comes down to just, again, proper credit due diligence, making sure you know what they're doing and protecting things that way.
So what would you say, you did allude to a couple of things that you did right, but what would you say your key takeaways were after this whole, well, we would call it the CFI domino drop, or affirmations, right? So you affirmed that you did, in terms of what you just explained, that you did those things, you had them in check. What about the less is more approach that you said that some of the other ones had, 50 different coins or 50 different assets, and you didn't go that route? Is that something that affirmed your path? Yeah,
I would say that I think in 2021, what was happening on the valuation side and this whole multiple of just bringing in assets at all costs to get a multiple.
Yeah, that was just crazy.
Yeah, and I think fortunately we saw that as being crazy, and we said we can play this game. But I think people are smart, but people are greedy, right? And so I think if you think that eventually things will make sense, they do. And unfortunately, sometimes it has to have a massive whiplash the other way
right.
For it to get back to reality, which was exactly what happened. But we took a view that we wanted to build something for the long term. I did something else for 12 years. I've been doing this for 5. I'd like to do it for a long term going forward. And I think, just 2 things is, no shortcuts is a good mantra, right? So if it feels a bit easier, things are most times the right thing to do is a bit harder and requires more patience. But if you're doing something and it feels better, that's probably the better thing to be doing. And I think just when it comes to our setup, one of the things that we love in how we think about the business is the best restaurants have the smallest menu.
Yep.
So focus on quality.
Yep.
It's
less
like less is more. So when you have that setup, it's like you want to have a really curated list. And look, all the best companies that everyone's proud of do this, right? Like if you think, again, pulling back from a lending side, but just on a consumer level, like when you walk into an Apple store and you buy something, you bought like good, great, or the best. Like there's no stuff that's not, like they don't sell anything that isn't high quality. And that's the same mantra that we want to be at Ledn.
Plus, it's just I think it just gets down to common sense. When there's too much choice within like a one-stop shop, when it gets too confusing, it's always a red flag. I feel like when you go somewhere and you're like, oh well, they have this and they have this and they have this, and it's like you leave more confused. It's almost like on purpose. So yeah. Less is more. Yeah. And also when you think that it's when it's too good to be true, it usually is.
For sure.
I feel like we always get back to the sort of the basics. Well, diving more into Ledn, you just touched upon what you guys offer in terms of centralized lending and a savings platform. And like you said, mainly for Bitcoin and if I'm not mistaken, so USDC holders as far as stablecoin.
That's right.
But also you have a mortgage product option. And then I just saw that you have some newly released products.
Yeah.
Feel free. I mean, can you walk us through your just a little bit more in depth in terms of your core products and what you guys are doing today?
Of course. Yeah.
In terms of your new stuff.
So yeah, to refresh. So on the lending side, we have our Bitcoin backed loan, which is putting up Bitcoin as collateral, borrowing dollars. We have a similar product, but the use case is a little different, which is our B2X product. So that product allows you to use the loan to buy more Bitcoin. So the underwriting is the same. So you're still getting, the loan is 2-to-1 at the end of the day, but you start with a Bitcoin and we essentially provide the dollars so you can buy another one, or, obviously in different increments. The yield products I touched on, so you can earn yield on USDC or in Bitcoin today at Ledn. And then the mortgage product. Sorry
to cut you off. Yeah. And is that rate, is it still around 8% for Bitcoin?
It's actually 9% for USDC. It's only 1% today on Bitcoin. And the reason for the big dislocation is supply demand. So we actually released something called the Open Book Report, which shows our utilization of the different assets within these products. And all of the USDC that we have available is being used to fund our Bitcoin-backed loan book today. So there's ample demand. We're seeing lots of clients that want to borrow dollars against their Bitcoin. On the Bitcoin lending side, the market is quieter. So obviously we just had a little bit of turbulence last week, but
no kidding.
up until that point, things were range bound, right? We were range bound at like 28 to 30K for months. And so essentially, the way the market structure works is you need retail demand to drive volatility in the market. And then when there's volatility in the market, institutional traders have an opportunity to frankly make money. And when institutional traders are making money and actively trading, then they have a demand to borrow assets. And so that's the kind of 3-step piece that we need to get the Bitcoin rates up.
Okay, and 9% for USDC.
Yeah, and I mean the reason for that is
that's pretty high.
Yeah, our lending rates are 10.9, and so we earn a net interest rate spread of about 2% there. So that's how we're paying that 9%.
Who is like I'm just thinking who would be or do you even have a typical profile of a person or borrower who chooses the 10 plus whatever you just said percent? Because that's super high. What's the mentality behind that?
Yeah.
Are people just willing to do that just for Well, I mean, go for it. I mean, just explain, because I'm just baffled that there's a lot of interest in that respect.
Yeah, I think so. A lot of our clients are very Bitcoin or other types of digital assets wealthy, right? And so, the traditional banking system only allows them to borrow credit on traditional assets like real estate or fiat-based income. So even a mortgage in the traditional banking system does not really lend against even the home. They want to make sure that you have a job, and hopefully that's a job where you're employed, not self-employed, because that's further risk. So it really is not addressing the needs of many types of participants in the market, and especially those that are very interested in digital assets. So and I think for us, I'd love to see the rates be lower. Our rates are a reflection of the cost of dollars. And so right now, I think we were seeing some progress to lower the cost of dollars in the space. But then when FTX happened, there was obviously a retrenching of different types of participants in the market, and that further boosts that. And then you add on the fact that just traditional rates are much higher. So I mean, mortgage rates have gone from variable of 2 to variable of almost 7, and so so it's not substantially higher than where things would be in the TradFi space today.
Okay, so sorry I cut you off earlier. In terms of your core products.
So the Bitcoin mortgage was the next the one that that was that actually came out of watching and learning from how our clients were using their Bitcoin backed loans. And so this product does get a little bit more local, which obviously isn't ideal for Bitcoin, but something that we're working on broadening out because we take security of the real estate that they're buying. And the reason that is beneficial is then we can improve the margin call terms of how a Bitcoin-backed loan works. So let's assume it's larger amounts because you're going to use this to buy real estate. So if you put up $2 million of Bitcoin, we can lend you $1 million. So what happening is the client would do that, and then they would go buy $1 million property. Well, the real estate property is a long-term investment. Hopefully them holding Bitcoin is as well. But if that's substantially all the Bitcoin that they have, they may be subject to margin calls or liquidation if that Bitcoin price decreases. And what we find is especially large holders have a very secure way of holding their Bitcoin. And so they may not have it sitting in a hot wallet on their phone when they need to top up. They probably have a different security protocol where it's in one or multiple cold wallets that they need to spend time gaining access to and send it in a calm, controlled environment. And so what we did was if we decided that we could take security of the real estate as well, we could improve the margin call terms. So the way that works is if we took security of the $1 million home, now we have the Bitcoin and the home. And so we can release back some collateral because we don't need $3 million of collateral. We only need 2. And then secondly, we extended the margin call terms so that you have 2 weeks versus what could be an instant liquidation if things are decreasing below certain thresholds. So that's the kind of main difference with the Bitcoin mortgage is we take advantage of the fact that you are buying something that we're happy to collateralize as well.
So this is the mortgage product option.
Yeah.
And then you have some newly released products. Or a product?
Yeah, we also have a dual cryptocurrency note, which allows you to take a view on the price of Bitcoin in the future. And typically this is like 30, 60, or 90 days. And you can participate in 2 ways. So if you own Bitcoin and you're comfortable selling it at a higher price than it is today, you can get paid to wait and to guarantee that sale. If you own stable coins or dollars and you want to buy Bitcoin at a lower price than it is today, you can also get paid to wait. So in a real example, let's say it's Bitcoin's at 25K and you decide that you're comfortable selling at 30K 1 month from now. So you may get paid a 10% annualized yield for agreeing to that piece. And so in 30 days from now, if Bitcoin's at 30K, you will get converted, you'll get $30,000, you'll still get paid your yield. as well. If it's not, you'll simply get your Bitcoin back and still get paid the yield. So the yield is paid no matter what, and then you have a kind of a different outcome based on the price trigger. So
based on what happens in the market, right?
Yeah, and so like I think when you think about the dollar one, a lot of people talk about dollar cost averaging into Bitcoin, right? They want to buy a little bit every week or month,
right?
And so this is kind of an interesting way to effectively do that, but we call it DCNs. So you can use this product to earn yield, and then maybe get triggered into buying some Bitcoin at a price that you're happy with.
Okay. Interesting.
Yeah.
So,
and then,
okay, sorry, keep going.
Sorry,
Go ahead.
No, I was going to say, and then we do have a pretty standard trade product as well, just to allow you to swap between the different assets on the platform.
Okay. So just straightforward.
Yeah.
So my question is in terms of centralized versus decentralized lending. Ledn products are custodial, right? So is that still the case in terms of I don't hold the keys to that, you guys do, Ledn does?
That is correct. Yeah. So there's a few different pieces of this. So I think I've definitely come to view this as a bit more of a spectrum on full decentralization versus full centralization. And I think decentralized lenders got a lot of credit post FTX on kind of surviving it and not having issues, which I think was deserved. But
right.
I also just wanted to comment it's a different type, right? So when we have collateralized Bitcoin loans, we didn't have any losses on that product either, right? So you're taking 2-to-1 Bitcoin. If it's set up and it's programmed correctly and you have the proper liquidity all built into it, there's no issues. And so it's more of a function of the type of lending than how it's done is like I think the nuance there that should be corrected. And then the other thing that you can provide when you do centralize some aspects of it is client service. And so I think this is an asset class that we hope more and more people will come into. And there's some challenges of trying to set up and use a fully decentralized wallet infrastructure today that we try to break down and make a bit easier when you're dealing with Ledn. So we focused on the things that we think we can be good at, which is very strong client support, a lot of education going into the product, and making sure people understand exactly what they're dealing with and how it works. And I think that's I think there's probably going to be some better tools and things like that helps with DeFi protocols. But I think today it's still there's probably a little bit more anxiety on coming into those products than there would be with some products that are a little bit more user-friendly to use.
So you're looking into basically maintaining the custodial part. You're not looking into going non-custodial at some point?
So I think the non-custodial piece comes down to the way we look at it on the lending side is what are we doing with the Bitcoin collateral? And so today, it's actually most of our dollars today are coming from our stablecoin savings account, which allows you to earn that 9%.
Interesting. Okay.
And so we don't have to post that Bitcoin anywhere else to get those dollars. But what we do have is we have the flexibility so that if we don't have enough clients that want to effectively lend us dollars through the savings account, that we can access more dollars from the institutional market by posting Bitcoin as collateral. So effectively, if you again kind of think about the TradFi sector, how mortgages are kind of packaged and you can access to different capital through doing that. That's in a way a similar market structure that you can get further access to capital by doing that. So I think there's a lot of things that we want to do, but we have to make sure that the capital in the structure allows for it. And so I think in the future, what you can potentially see from Ledn is different optionality. In that if you want to effectively lock your Bitcoin and know exactly where it is, perhaps on chain, although that does add a bit more complexity to it, then you can have that option and there'll be a different rate for that. But again, we want to make sure that the current market structure can support that. And I can't again, it's difficult to not go too much into the weeds, but
Sure.
yeah, there's there's a lot of things that we want to do, but then there's the things that we can do today with the market structure.
Part of it.
Yeah, that's in place. So yeah, just to say, like we're trying to balance a lot of different things, and it goes back to kind of my original point is like every loan has two customers, and so if you don't have the customer that wants to lend the dollars in that way, you can't offer the product on the other side of it. So
Sure. Fair enough. What's your main, I'm just curious, what's your main client base? Is it more individual or institutional, or is it a fairly equal mix of both?
Yeah, so I like to say that every product has two types of customers, right? Again, on the borrowing and lending side.
Yeah.
So we really have a 50-50 mix of both. So if you're depositing Bitcoin, most of that client base is retail or high net worth, so individuals. And then, but the Bitcoin is used to supply the demand of different institutions. And so we have a lot of institutional clients. And so we even have our business segregated in that way. We have a institutional group that manage all of those relationships. And then we have our product and marketing teams that manage all the individual relationships on the other side. And then
yeah, sorry, go ahead.
And then I was just going to say, from a geographical point of view, so we started in Canada, and so we built up a decent client base here. Because of Mauricio's background and experience, we decided to effectively leap over the US and go directly into Latin America next. And so we focused on product education and growing in that region of the world. And then along the way, we picked up a client base in the US and Europe as well, just because of frankly, organics and different clients looking for different alternatives. So we're effectively like, 1/3 Canada, 1/3 Latin America, 1/3 Europe today. And we're working on awareness more broadly in the world. So we're spending a lot of time thinking about how to broaden out Ledn into the MENA region, into Asia, and making sure that we can offer our products into clients in those regions of the world too.
And in terms of geographics, is your institutional client base, does that hold, when you say 1/3, 1/3, 1/3, does that go for just the individuals, or where are most of your institutional investors from?
Yeah, that's a good point. So I was speaking to individuals, but the institutional side is actually very evenly distributed amongst the globe. So
interesting.
Some of our institutional partners are set up in Singapore, Hong Kong. We've got a decent amount in the US, in Europe as well. So yeah, it's pretty global.
And when you say Latin America, the region, does that encompass like most of the countries already, or would you say it's mostly like the Venezuela and the surrounding neighbors?
Yeah,
I imagine Venezuela is one of the main ones.
Yeah, it's interesting actually. We have more clients in Colombia today than we have in Venezuela, and that's because we found a really good crypto educator to work with in the region early on. Papa Bitcoins y Cryptos is his channel. I recommend Spanish speakers check him out. He's been excellent. And then other just marketing we got started in early on there. But yeah, I think Argentina is obviously a major market right now with everything going on there with 100% inflation.
Yep.
And Brazil is quite a different market. We've had some success in Brazil as well. The platform is available in Portuguese, but there is obviously very different and local cultural nuances you have to take into consideration in different regions. But I would say it's pretty distributed amongst all the different LATAM countries, Mexico as well, of course.
Okay, I'm pretty surprised about the 1/3 Europe part. It's very interesting. How how big is your team now to cover all this? How many people do you have in total? Are they spread out? Or are you more localized? Like, I know you said you started out in Canada, but do you have more of a remote team going on?
Yeah, today our team is 40 people. And so we have our client success team would be more remote to cover different time zones. And we have most of the management team. So I'm now in Cayman, and a lot of our other management team is spending time in the Cayman Islands as well. And then we've got some team in Canada too.
Okay, so 40. It's pretty decent size. How many devs do you have, or do you have?
Yeah.
Okay.
About half of our team is technical, so that's a piece that we're obviously. I think, I'll obviously being an engineer myself, I have a bias for bringing on as many engineers as we can. And but we obviously, what's interesting about this business is really all the different facets and teams are very important, right? So we have to have, strong risk management. We've got to have strong, even like, not even, but, our financing accounting teams are very important. And I can go through all the different departments, but it's pretty important to be well-rounded. Yeah.
No. Yeah. Just to have a good idea, because also that leads to what you just alluded to in terms of risk management. I would assume that is very much also a core focus, that you have to make sure that you have your risk management on par. And I'm just curious, who also does your auditing?
So we're not currently audited, but we do a...
Oh, you're not audited?
Yeah, so we do a different process that's called proof of reserves. And we do this with a firm called the Network Firm that checks that we do it every 6 months, and they confirm that our assets are greater than our liabilities. So we may be audited in the future. So we don't have a requirement to be audited today. So that's, obviously it's something that when we look at what are the different things we can focus on, and we'd like to spend more time, making sure that we have strong risk management procedures, and also, building better products for our clients today. But I think in the future is something that we will be looking to do as well. And we may have a requirement to do it under certain different, if we ever want to take the company public or different aspects of how we'll grow the company, that would be obviously a precedent to getting that done.
So just to backtrack, your proof of reserves approach is, you mentioned it's checked every 6 months.
That's right.
Okay. Just want to make sure.
Yeah, of course. Yeah, so we do.
No, it's an.
Yeah, I think if you go back to the start of this year, we knew that we had to do a massive lift to rebuild trust in the lending industry, and so it's one thing to survive, but like. I'll be, very blunt and thinking about this, right? I'll use like a motorcycle brand analogy, which is like, I don't know, completely random, but I was just thinking about this, right? If everybody's been having a great time and riding motorcycles, and then like there's 5 of them and then 4 of them blow up and run off the road, like the other one might just not want to ride a motorcycle again, right? So I completely get that, we might be around and there might be a big opportunity ahead, but we have to really explain why we're not a motorcycle, or actually a Hummer vehicle that is fully protected and has a lot more checks and balances and has 4 wheels instead of 2 and can take you way further, and so it's like you kind of have to break it down and say what are the concerns today? Are those legitimate concerns? How do we get clients comfortable with this? And how do we make sure we continue to do the right thing, right? Because our team's investing a lot of time in this. We have a lot of different clients that have trusted us, are continuing to trust us, but we obviously want to grow and bring more people into this ecosystem, and more people hopefully as clients that we can have the opportunity to work with. So at the beginning of the year, we knew that trust and transparency was the number one thing that we had to focus on. And so we set out to create a new standard, which was the open book reports. We said, okay, let's show people exactly how we're utilizing their assets. And so we do that monthly. And then the proof of reserves piece with the network firm was something that we actually started several years back, and we were the first lender to do it. So we said, yeah, we'll continue that. We also started to do check-ins with our management team. And so we do open kind of effectively like AMAs with the team that clients can submit questions to. And then the other piece that I can speak to structurally is we did change how the yield accounts work. And so we recently did this with Bitcoin. The next one coming up with the USDC is going to be announced in September. But this is changing it so that there's no longer binary outcomes. And so if you think about what was the market structure of a crypto lending company, was everything was in one bucket. And so if you look at what's going on with the bankruptcy proceedings today, you have a situation where someone that just wanted to borrow against their Bitcoin or ETH or whatever other asset that they were using to collateralize on one of these other platforms is now stuck in the same bankruptcy proceedings, resulting from maybe a lending loss to Three Arrows that was used to effectively run the yield accounts. So I wanted to only borrow, and now I'm stuck with because of the actions of that was caused at the company level because they're running a different product. So we thought that the business would be a lot better, both internally and externally, if we group those different activities. And we tried to our best ability to ring fence them. And so that's exactly what we've done with our Bitcoin growth account now. And so we actually created a separate legal and separate technical structure where if you're participating and you're effectively lending your Bitcoin into the growth account, you're only facing those borrowers and you're not even facing Ledn. So in the remote circumstance that Ledn goes bankrupt, you are not impacted because you're in a separate legal entity that sits, adjacent to us. And so, just to make sure that I don't overstate or overpromise, there could be a situation with one of those borrowers goes bankrupt, but because effectively the pool of assets is lent to a diversified group of borrowers, it's not an all or nothing thing. So this would operate, again, in a more rationed approach where we have a whole recovery process that we have put in place so that it's not like an all or nothing thing in that pool. So again, I think just by saying that, B, doing it, and then committing to always produce things like the open book report that shows how the assets are utilized, clients can make their own decision, right? And I think that's what we have to make sure that we do. Is our job is to set up a structure that we think is the best way to create these types of products, and then make sure that we're providing the most transparent information that we can so that clients can make their own choice as to whether they want to participate in them. And so after that, obviously we have to continue to manage things in the best way, but I think that's the best we can do, right? So, there is risks with everything, and our job is just to make sure that we communicate those risks and benefits, and then make sure that clients have as much choice as possible so they can decide whether it's right for them.
Oh, thanks for that. I think trust and integrity, the trust and integrity part is crucial, especially now. The crypto space is sort of finding its way and going up and down certain bumps on the road, and everybody gets affected one way or the other. But with what you are doing, I think, you're definitely doing all of the right things. And in terms of, let's say if I was an investor, and let's say if I invested, I have like $1 million with you guys. For myself, I just want to make sure I can get that back if you go under.
Of course, yeah.
So, we can, technically talk about all these things, but once you want to put theory into practice. Yeah,
look, I think,
and vouch for it.
I hate to even make a joke of it, but everyone was focused on yield on capital. The most important thing is return of capital.
Yeah,
right.
Exactly.
So it's like if you're not getting your principal back, what's the point of trying to get a return?
Exactly. Yeah, that's where the greed part comes in. So just curious, do you have direct competitors? Like, is there anyone? I haven't actually, on this podcast, we haven't had anyone actually offering what you're offering in terms of your products or your core products, but in terms of lending, exactly what you guys have. Do you consider your competitive landscape, or do you not even consider that at all? Yeah,
look, we definitely monitor it. I think what's encouraging is we're starting to see some new competition come in. And I think that's,
which can be healthy.
Yeah, which can be healthy. Look, I think I encourage innovation. I also kind of half jokingly say that the best ideas are copied, but the best products are original, right? So
good one.
Come in, and, I think for us, we have the benefit of 5 years of experience, which may not sound like a long time in the TradFi space, but in this space is equivalent to multiple decades. And so we've learned a lot.
Absolutely,
we've been through a lot of up and down cycles, and we're just going to continue to get better.
What would you say? What would you consider your biggest challenges over this 5-year period?
Yeah, I would say it's focus in times when things are bullish. And so that's where, like we had a lot of pressure to grow. So I'd say like the resistance to not get into the AUM at all costs was real. And so I'm thankful that we didn't get caught up in that aspect of it. And I think that I'd say focus on the product side is key too. So you're always trying to disseminate, right? Because I think people ask for everything, right? And so it's like, okay, you're asking for this. How many other people want it? How do we test it? And then I would say it's people on all sides. So I'm very fortunate and thankful with the team we have today. I think we've got, people that are very committed, focused. And that's, a continual thing is how do we get things shipped faster? How do we get things shipped responsibly? And how do we just keep adding value to it? So I think, the people aspect of the business is the most challenging, but the most rewarding.
Absolutely. I have one question looming in my head, which I did actually clear up with you before having this conversation. Given that you were originally a Canadian company, I think you know where my question is gearing next. In terms of the Canadian trucker scenario some years back, I know now that you are set up in the Caymans and it's a different story, but obviously it was a global phenomenon and I personally think a wake-up call to many. If we can just speak about this hypothetically, what would happen if the truckers would have accounts with Ledn and you were still in the Canadian jurisdiction in terms of everything? Would you have to freeze their assets? Given that you are centralized, you are a CFI, what would happen? Yeah,
happy to speak to that. So I think the setup of the truckers piece was fascinating for me as a Canadian. So I was very much working in Canada at the time. And I think the international reaction was far more severe than the domestic reaction.
Really?
And so maybe that was just, the circles. Like obviously I would say, the Canadian Bitcoin community was quite loud and, understandably, because it came down to financial rights and freedoms.
Yes.
But I would say that, talking to, friends and family that weren't in it, it was like, oh no, that's like, 50 people in Ottawa, right? And so it was a little bit, I will say that
inflated.
Internationally, I think it was a bit inflated because I think it was like, oh, Canada is, there's never any news out of Canada. This is crazy for Canada. So I think that spin, like it's like, normally it's like anyways, far less exciting things coming out of Canadian news. So I think that
which is not a bad thing.
The
actually,
sensationalized of like
it's not a bad thing.
Yeah, exactly. So I think like if it was the US, it'd be like, oh yeah, it's the US. There's always crazy stuff happening in the US. But it's like it just, I think it was so shocking that it was happening here. I think it is a big deal, and I think it can happen anywhere. So I don't think it's anything to do with Canada, but the fact that it did happen here, I think, and the reaction was concerning for sure. Just to restate, we are fully domiciled in the Cayman Islands today, so we're fully regulated there. We don't have any connection to Canada when it comes to how we're operating the products today. So
but what if there's truckers on Cayman?
Yeah, no, exactly, right?
Or I don't know, fishermen or something, something happened and
so that's the point. I think I think it is interesting because it can theoretically happen anywhere, and it comes down to that is the piece of we're in this odd matrix, and I think I see the same thing when I travel, right? It's like you can buzz across the world and you can send Bitcoin across the world. But then when you land in the place, you have these rules that are sometimes archaic and not at all with the current times. And but they're still important because they can shut you down if you don't do things in a certain way. And so I guess to first talk about Canada, and we'll get a bit high level later. But I would say that so what exactly happened was they did use financial sanctions to attempt to stop transfers, right? So effectively what they were trying to stop was from my understanding of it, was really like international money coming in, right? So there was starting to be, from what I understood, different people around the world sending money to support this. And I think frankly, the government was scared. They were getting a little bit overwhelmed with it was fairly contained, but I think there was like, okay, how big could this get? So then what they did was they started to freeze temporarily, because I think they've now all since been unfrozen, but still a very big deal. And they're effectively, how it works is the financial regulator for anti-money laundering, but also different types of financial sanctions is FinTrack. This is equivalent to FinCEN, and they come up with a list of names, and then if you're on that list, you have to freeze the account and then wait for their direction. And so it'd be akin to almost, which is I think again crazy, because I think the example was so different from this, but not dissimilar to probably a U.S. company that, again, with all the tension with Russia today, you get a name that's on that hit list, and then you have to deal with their accounts, right? So I would say that these financial sanctions exist everywhere, right? They're in the EU. They're in. I'm sure Russia has its own sanctions against Americans, right? But I think the thing that made this situation so newsworthy was it didn't seem like a sanctionable event, right? It was people, theoretically, and again, I can't claim it was completely peaceful, but I think for the most part, it was peaceful. And, that was, I think, the thing that really struck a chord with people globally. Like, oh, wow, okay, if I lose my right to protest and therefore I can't support the protest financially, how bad can this get, right? So I think that's the aspect that is quite scary. And again, the thought of a country so free as Canada changing into this, I think, was again the newsworthy event. But yeah, I would say that any company operating in an area that is regulated by an entity like that has to abide by that, or there's fines, right? And so I think they could choose to ignore them. They could weigh the cost benefit of what is the financial penalty versus the not abiding by it and the reputational piece. But I would say just to again put into context the size of this impact, we didn't have any hits. So despite having a lot of Canadian Bitcoiner clients, despite having large client base in Canada, none of the entities that or names that the FinTrack entity was asking us to freeze were on our client list. So it was quite small, I think. But again,
everybody was,
everyone was, right? So like TD Bank, yeah. So anyone who operates in a so anyone in Canada, right? So like it's literally like a broad list. So we weren't emailed directly, but we were advised that everyone has to check like a list of that. So yeah, again, zero effect today because we're in Cayman, but I think it's like you said, of course it can happen anywhere, and on an individual basis now it is happening to certain, I don't know how much you're following, but to certain politicians, because whether or not you agree with them or not, you got the UK, Nigel Farage thing going on, and it's just curious, right? Because it goes back to, I guess, freedom of speech, but then again, look, exactly, and I think it's a tricky situation. It is. If you can't access the fiat system today, it's pretty decimating, right? And so that's where, again, we're not there yet with Bitcoin or other digital assets where, yes, I think you can move to El Salvador and you can operate in a Bitcoin only economy there. But broadly speaking, other places in the world, you can own only Bitcoin as an asset, but then you still need on and off ramps today to interact in different ways, right? So I think I am very interested in moving to an economy where you don't need that. And I think that's really important to maintain freedoms. But I think that is the reality that is perhaps a little bit scary today, and that there is kind of binary where if theoretically, again, what's happening in the UK, that there could be some scary outcomes if you don't comply. So yep. Well, Adam, I think we're approaching, we've definitely, I think I've exhausted you over the last hour. I've enjoyed the conversation. What's next for Ledn, for your product ecosystem? I know you've alluded to a couple of things, or what you would like to do versus what's the reality, but how do you see your pipeline or your roadmap in the short term? Yeah, I'm so proud of our team and the amount of things that we've been able to get done this year. I mean, it's the saying is like bear markets are for builders. building, and it's very true at Ledn. We've gotten a lot of things done, and a lot of things are going to ship in the next couple months. So I mentioned the massive restructuring of our savings now growth accounts. That was a really big undertaking to think through how to do that and how to improve the structure of those to protect clients. So that's been one big thing. The DCN products, the fact that it's all been automated now, that was a product that we did, 50 million of notional on an OTC basis, just on a trial basis last year. So it's been exciting to automate that and watch clients deal with it in a more seamless way. We are going to look to support a select amount of other assets, but keeping to a very, very tight menu. And so, I think when we think about broader stable coins, we want to make sure that there is more and more ease of access to Ledn's platform. And then the other piece is, I think again, back to the awareness side, is we want to get broader into different regions. And so I'm personally spending a lot of time in Asia. I'm actually getting ready for a trip shortly. And so I'll be spending time, I'll be at Token 2049 and Korean Blockchain Week and other events in Asia in September, and then in the MENA region in Dubai and actually Saudi Arabia later in October. So just really excited to tell more people about what we're doing. And I'm going to be spending a lot of time with our clients as well. We're setting up different events. So I love speaking to different people operating in the space and understanding what's points of friction and what's working well for them. So
well, perfect. It sounds like you have busy times ahead.
Yeah.
Is there, Adam, is there anything to add that I may have not asked that you would wish our audience to know and to take away?
Yeah, so we created that open book report. That's exactly what we are at Ledn. We are completely transparent of what we're doing. So I would just say, if you have any questions for me, for the broader Ledn team about what we're doing, any ideas, you want to know more about how things are operating under the hood, I think it's just everything's better when you tell people what you're doing, why you're doing it, how it works. And so if anyone wants to learn more, my Twitter handle is Adam Reeds. Ledn's is HODL with Ledn. And so happy to, connect there.
Great. We'll include all that information in the show notes. Thanks for that. And well, thanks so much for having this conversation with me today. It was actually truly beneficial to dive into the world of lending, crypto lending. I know crypto has a bad connotation, but I don't know what else to call it at this point. But, hopefully we managed to mitigate some of the perhaps negative stigma or just the reservation an individual might have towards crypto lenders. I mean, this is no offense to you, but I think it's really good that you're talking out transparently and openly and giving out all kinds of information and just it certainly helped me. So
thank you so much.
I
appreciate you taking the time to speak with me.
Absolutely. Keep up the good work and best of luck.
Thank you so much, Nina.
Thanks, Adam. Thanks again to our guests, and thank you everyone for listening. Thanks also to the Bariam Music team for providing their music. You can check them out on bariammusic.com. All of the supporting information is on our website, blockchainrecorded.com. You can listen to us on Google, Apple, and Amazon podcasts, as well as on YouTube, Spotify, Radio Public, and Stitcher. You can follow us on Twitter and YouTube, where we are super grateful for your support. Stay tuned for our next episode.